Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening each and every week to the show. I just got a call from one of the guys at KMET out in the Inland Empire, Banning, Palm Springs. That's the area. And for those of you who aren't in Southern California, this is east of Los Angeles. Anyway, he told me that the station is putting our show on Mondays now at 10 a.m. So you can listen to it in that area at 10 a.m. on Monday, as well as our Sunday 10 a.m. time slot. And also we shoot this for television, and KMET as well as KCAA, they carry some video feeds. So you can go to their particular websites and see our show. Also on YouTube, Jeff Barton, the Mortgage Voice. That's our YouTube channel, and you can see us there. Every week we do the show. We've got hundreds of shows up there. We do a daily that's on LinkedIn as well as on Facebook, and unfortunately, LinkedIn, they have a limit of, like, I guess 30,000 that you can have. I don't have 30,000, but I mean, if you wanted to really try to push this thing on a national basis for many, many people to see it, you can't do it because they have a limit. But anyway, those people that do see it, hear it, appreciate it, you can go to our number of podcasts, the Big 8 podcasts, and I think Daryl has a list of the places that you can hear the show.
I do. Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and of course you covered YouTube quite well.
Okay, thank you very much, Daryl, and thanks again. He does such a great job. I don't have to really think. A lot of the times, well, actually, when I do the LinkedIn show and the Facebook show, I have to set it up and kind of do it all myself, and I just like being the star, You know what I mean, Daryl? You're an on-air guy. You know what it's like.
I know exactly what you're talking about.
So for those of you who don't know what we're talking about, it's maybe in your life or whatever you do at your job, if you're the boss or someone in charge of something, or perhaps at home in your home environment, you're the boss there. It's nice to be the boss. Yes, there are a lot of pitfalls to that, but at the same time, making decisions and doing what you want to do when you want to do it is always a good thing. One of the things I ran across while prepping for the show today was a thing called ghosting. Daryl, you know what ghosting is?
I actually do not know.
Okay, so ghosting is the type of thing whereby you just disappear on someone. Let's say you're dating, right? And all of a sudden the person you're dating disappears and you never hear from them again. That's called ghosting. Well, and the only reason I bring it up is because people are trying to find work. And one of the aspects of finding a job is understanding where you fit in the scheme of other people who are looking for jobs, or feedback from the potential employer to understand what you might be able to do better. Now, there are many people online who will help you, either on your LinkedIn profile, your Facebook business page, and detail to you and help you through the process. It costs, but there are ways by which you can get these people to help you. The problem is when you have, the number is astounding when I tell you, the employer refuses to play the game, i.e. they'll interview you and then you'll just never hear anything. Not a no, not a yes, not a thank you very much for coming in. Now, I'm an old guy, right? So interviewing for jobs, and Daryl, you've interviewed for jobs too. You know what it's like.
I have, and I've been on both sides. I've hired probably a couple of hundred people, and I've applied for 7 or 8 probably over my career.
Right, and so in this process, the give and take with the potential applicant is one of the important aspects of the interview process, right?
Yeah, absolutely. There's got to be some back and forth. It can't be just a one-way street.
Right, and I think because of the fact that we're in a situation where we've got, let's say 20 million people who are currently looking for work, the employer either is inundated and can't do it or just doesn't care to do it because of this phenomenon. And this phenomenon by this group of employers, currently, the number stands at 93% of employers do not respond once the interview has taken place. So you're all geared up, and like me, and I'll try to show everybody who's watching on TV. See, this is a tie. I know nobody wears ties anymore. In my generation, you don't wear a tie, you're not going to work, right?
Very much so. Yeah.
Very much so.
I had a suit and tie job for a long time.
Exactly. And I happen to enjoy the accoutrement, the whole look of me going to work. So you're a job applicant. I don't know how you're doing it, but most of them are now done via Zoom, as this show is being taped via Zoom, or now they don't call it tape recorded via Zoom. So you're an applicant, you're excited, you want to get a job, you've seen some online applications. And by the way, I look at online applications. I don't know a person who's employed or not employed who doesn't look. If you're not looking, then you're not aware of what's out there in the marketplace. Not for me in particular, but what people are saying about their jobs, about what is the need in a certain industry. You got to find out what's going on out there, or else you have no idea what's going on out there. 93% of employers do not call you back. You're excited. You're sitting in front of the Zoom. You have this great interchange. My son got a job, full-time job. He's a salaried employee during COVID using this exact process. So he was a successful person, but only 7% of the people that do this kind of job interview get feedback from their employer. I think it's shameful. I think employers have to look at this beyond what employers need for that moment and understand that not only do people come to you and they are most jobs are very frightening to try to go and get for anybody because you're just being judged. I know I'm an actor. I was an actor for many years earlier in my life, in my 20s. And sitting there and being judged by people and having no idea what the criteria is. At least in your job interview process today, you have a list of requirements. If you meet the requirements and you get to the first interview, the next interview is the goal, right? But ghosting is what's happening because none of the employers are getting back, even after the first, the second, maybe even the third interview, they're just gone. And you have no feedback, therefore you have no idea. So your self-esteem plummets, and this is not a time where we need self-esteem plummeting. We need people to be bolstered and, told that, yes, you will get a job. Yes, I have a client who I'm selling his townhome, and it's $1 million townhome, right, in beautiful city of Malibu, California. And what I'm constantly having him remind me of is that it will sell. Don't worry, it will sell. And I'm constantly describing the process, how it's happening, whether it's going right or whether it's going wrong, because the nuts and bolts of a listing is exactly what most sellers want to hear. My guy's great because he knows it'll sell. I know it'll sell. Maybe a tough time right now, but if you look, and the other thing in the real estate market right now, if you look around and you are working and the real estate prices are, they're still going up, but there are opportunities. And I want to talk in the final segment today about real estate and what has happened to major U.S. cities and whether that particular process is a permanent process. Is this a changing, how when this type of thing affects, you get a lot of friends that'll say, oh, this is going to change everything. We're never going to be the same again. And I'm the type of person who says, well, we'll adjust and it'll, mentally it'll be normal, right? And after 9/11, when all the instituted security measures came down, yeah, we got used to it. We got used to the airports. We get used to extra scrutiny. We get used to extra documentation, especially in the loan business where we are. And by the way, let's just get to it. Let's see the rates for today, 2.88% for the 30-year fixed. The 15 is at 2.41%. The FHA is at 2.45, and the jumbo is 3.44. All of those are down except for FHA is flat. Rates are great, and that's because they postponed that hike in fees by FHFA, and that's also really a good thing. But as we're discussing real estate and the ability by which people who need a job obviously can't afford the real estate, those people that are working, are they going to stay in the city because that's central to where they work? Are they going to move out into the other areas to do remote? Anyway, I'm Jeff Barton, your voice in the mortgage industry. We'll get back to it. I really appreciate you listening, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening, and thanks for tuning in each and every week. We are on the Big 8 Podcast, YouTube, Jeff Barton, the Mortgage Voice. We're on 5 stations, well, actually about 7 stations in 3 different states, from Las Vegas, Nevada, down to Albuquerque, New Mexico, the Inland Empire in Southern California, as well as Tahoe. And those areas, they're all under fire still, right, Daryl? I mean, they're just burning.
Yeah, pretty much. It's tough out there.
Yes, it is. And so a couple of things that we talk about during our show is opportunities, way to get a loan, the different aspects of the lending business, and lenders that are able to help in determining or helping you decide and making decisions and funding loans for you. One of the guys that has been nice enough to come on the show today is Brian Fox, and he's from AHL Lending, and his sister has been on the show before. But Brian, thanks very much for joining us, and I really appreciate it. You're, I believe, the executive VP over there, yes?
Yeah, that's correct. AHL Funding, we're a non-QM wholesale lender, and thanks for having me on the show.
Thank you very much. Okay, you mentioned a little bit about non-QM there. Tell us what is happening in the non-QM sector. I mean, we lost probably 30% of the potential borrowers when COVID struck. Now that we have some of the programs coming back, what are you all offering and how are you helping?
Yeah, I mean, it's been a bit of a challenge with COVID. We kind of got through that, and the products are starting to come back. We're seeing some really good traction now with bank statements. We're back up to 90% loan to value, which can really help some borrowers get into a house if they, had a decline or they were ineligible with more of the paper agency stuff. So we're strictly non-agency, and 90% bank statements has really helped us a lot, as well as these rental property loans that we offer for borrowers that want to buy an investment property. Now is a good time to always look at expanding their portfolio. And we have the debt service coverage ratio, which means that as long as the mortgage payment, as long as the rent in the area on the appraisal covers the mortgage payment, then we don't ask for a lot of documentation. There's really no income. There's nothing that we really offer as far as or ask for as far as income, because we know that the rents will cover the mortgage payment. That pretty much makes sense, right?
It does. And let me ask you a question about that, because we've had a number of states and the federal government say, hey, you know what, if your person lost a job due to COVID and they can't pay their rent, you can't throw them out. How is this affecting how you're lending on a product like that? Or is there an investigation or a way by which you can say, hey, look, you can't get anybody in there who isn't, have a job? I mean, how far into that do you get, or you just rely upon the borrower to figure that out?
No, we definitely have what's called now COVID overlays. And what that means, it's just an added guideline that says, if you're purchasing a non-owner, a rental property, let's say,
right,
we would want to see that the person that's in the property renting it has made their payments for at least 3 months. So we will ask for proof of that. That's the only real change that has happened with that style of loan.
Right.
If they're doing a refinance, then we definitely also want to see, that the borrower has made the payments to the landlord or the borrower for the last 3 months. So that's the only real difference that has affected us. Besides, we do look, at the employment and make sure that they are still employed. We don't ask for income, but we do do a verification of employment.
Okay, very good. On more of a conventional side, that becomes like a sticking point for a lot of people doing loans, i.e. there's an initial, there's an intermediary, and then there's a end verification of employment. How are you guys handling that differently, or are you? Is it throughout the process of the loan, or you do it one time? How are you handling that?
We basically handle it when we're after signing docs. So after they sign the loan documents, we'll do the verification call prior to funding the loan.
Okay. Yeah. Okay. No, that's good information. And how has the business been for you guys since you've gotten back into it? And are you finding that there are more investors buying those types of loans?
Yes, actually, it's been slow. Definitely has been slow since we started last month. But that was just the initial week. Once kind of word got out that non-QM is back and we're able to go ahead and help borrowers.
Right.
We've seen a big influx in business. Our pipeline has doubled since we started. So there's definitely a lot of interest out there for these type of transactions to help people that could not qualify on the agency side. So we're actually pretty pleased with what's going on. And more and more investors are coming back. They're a bit timid at first, but now it's looking like it's happening. And the good thing is these loans perform so well.
Right.
There really isn't a reason to not do them because the borrowers that take out these loans, they make their payments. And that's the most important part.
Yeah, absolutely right. And I think that in forbearance, you have a lot fewer non-QM loans in forbearance than you would have in a traditional loan, or certainly FHA. You have a lot of people in forbearance as a result. Do you have any particular, figures or information on how many people in the non-QM sector are performing or not performing? Because obviously that's what your investor's looking for, right? And that ultimately will give the borrower a greater range of products which they can buy or borrow from on the non-QM market.
Yeah, we didn't have a real challenge with forbearance.
Great.
I think out of the couple hundred loans we did early on before this hit, we had 3 that we had challenges with that wanted a forbearance, but we explained to them the type of loan and everything, and they just made their payments. I think a lot of borrowers just heard on the news that, they could just go into forbearance.
Yeah.
And with non-QM, it's a little bit different.
Yeah, no, that you say that it's like the PPP program I hear about, and we're just now getting trickles of information about companies that are just ripping them off. So I laugh because I know the nature of people. Hey, I don't have to pay my bill. I guess I'm not paying. And I think
right.
I'm not sure that that's a great business model. And once I guess you're explaining it to people, 3 out of 200 would be really negligible anyway.
Yeah, it was very, very small for us. So once you explain it to them, they were like, "Oh, of course." And I think that we may see some challenges with some of the people that did do forbearances on other products in the future. But right now, it's okay. If we do, in speaking of forbearance, if we do have someone that is refinancing or purchasing a property and they were in forbearance, let's say last month, maybe they just got out, we actually want them to be out of forbearance for 3 months.
Right.
And show that track record of those payments.
Okay, well, that's right along with what Fannie and Freddie is asking. 3 months of payments once you're out of forbearance, and therefore it'll show up like that on your credit report that you are current, and that's the important part, I guess, for you guys as well.
Yep, exactly. So, and then just to piggyback on a couple more products, it's the bank statements, which we do a lot of, and we go up to $2.5 million in loan amount. But we also do like an asset depletion, and that's for the borrower that, may have stocks and bonds, 401ks, maybe they have money in the bank.
Right.
But they don't have a steady stream of income. We will actually utilize the money in the bank, the stocks, bonds, 401ks, and we'll use that for income. So they don't actually have to prove either bank statements or W-2s, pay stubs, tax returns. So on that program, I'm seeing a lot of traction with that because there are some people that have money in the bank and 401k, stocks,
sure.
And we just utilize that. We average it over 86 months, and that's there. income amount.
Excellent. Hey, Brian, could you shout out your phone number in case someone has some questions about the program or would like to talk to you a little bit further?
Yeah, absolutely. My direct phone number is 949-566-1515.
Okay, thank you very much for coming on the show, educating us. Sorry again about last week. I'm glad you made it up and got into the show. Very informative, and I appreciate the time.
You got it. Thank you, Jeff.
Thank you very much. That's Brian Fox from AHL Lending. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening. Thanks very much for tuning in each and every week. We're on a number of different radio stations from Albuquerque all the way up to Las Vegas, Nevada. And we are in the Inland Empire in Southern California, as well as up in Lake Tahoe. Some of the neighboring states are burning. There's a fire going on. It's going to affect fundings for those counties and those areas. Make sure you check with your lender if you're in a purchase contract so that you don't get caught behind the proverbial 8-ball looking for funding because your contract says you got to close on a certain date when the warehouse line has pulled the funding or pulled the ability to fund from that particular lender. Check on it. We're on YouTube as well, Jeff Barton, the Mortgage Voice. You can see this show as well as hundreds of other shows that we have there. We do a daily show on LinkedIn and Facebook, 4 or 5 minutes. We talk about the daily things happening in the mortgage market. And there's always things going on, especially with COVID, especially what's going on in COVID. We're going to take a jump to Las Vegas now, where we have the star of Lifetime's Marrying Millions with us today, Janti Chun. Janti, how are you?
Hey, Jeff, I am terrific.
Thank you very much for coming on the show. I know that anybody who's listening to the show in the past knows that you're not only a star of television show, but you're also a terrific business person as well as a real estate investor. And the reason I had you on the show is because, one, it's a pleasure to talk with you always, but two, you have your ear to the ground as to what's happening in the market there, as well as, you know, the lifestyles of the rich and famous. How is that working out for you in Vegas now that it's shut down?
Well, the lifestyle of the rich and famous just stays home and saves money, so it's good.
Oh, that's very good, and that's excellent advice for most people. I think anybody who sees someone on TV think that they're living their Kardashian life, but even the Kardashians staying home and being careful is probably the norm for what they're doing as well. Tell me a little bit about the show this season. What's happening this season on the show for you?
Well, on Marrying Millions this season, which is season 2, well, you know, my journey is a little bit different from season 1. So, you know, I left the ex at the altar after season 1, and now my journey is kind of like a single woman here out in Las Vegas trying to date, basically on the dating scene, and I tell you, it's really tough. Yeah.
Even for someone like you, as smart and as qualified as a partner could be, even for you, it's tough. And do you get into the fact that it's a COVID situation, or do you just ignore that completely?
Well, if I did have someone, I probably would ignore that completely. But,
I see.
But yeah, as far as dating as a single person, yeah, the COVID definitely did not help. So a lot of us, if there is any type of relationship, I would assume that it's all online and phone conversations and stuff like that, which is probably a good thing. You're going back now to the old-fashioned way, of a guy actually maybe courting you and getting to know you for a few months.
Yeah, that really went out the window about, 10, 15 years ago, but that it's come back, yeah, that's nice. I guess that's nice. I wouldn't know.
Sort of.
Yeah, I wouldn't know. Let's digress a little bit more into what's happening on the Strip, what's happening in the surrounding area in businesses. I know that you had a business for a while in the ice cream world. I think you don't have that anymore. What's the typical small business owner doing during this time in Vegas? Just waiting?
Oh, God, yeah. It's been very difficult for business owners, especially small business owners. I mean, but even the large ones have, filed bankruptcy. and
Right.
stuff after I think within this month, a lot of the larger chains. So it's been really tough for a lot of us. And unfortunately for me, I closed down my stores before COVID hit, basically,
Uh-huh.
but I still have the catering, which unfortunately, and I'm not doing anything there either. In
Right.
this month now, I'm just starting to cater maybe 2 or 3 parties, but
Oh.
everything is basically shut down now. Investment-wise, real estate, real estate is doing good, despite
Right.
what's happening in the economy right now. Las Vegas real estate is doing very well.
Now, are you seeing more new homes being built? I know that during nervous times, a lot of the construction stops. Has that happened this time, or are people still building the way they were
Well,
pre?
yeah, well, the new build, not so much. They're trying to sell off the inventory that they have before
Right.
they start building again. But, right now in Las Vegas, we have a very low supply. We're less than 6,000 right now on the market currently,
Unbelievable.
about 5,900. Okay.
Right.
We're at a month and a half supply, maybe. And,
It's amazing.
in July of this year, there were more home sales, for that month compared to since 2017. A lot. That was the most home sales in 1 month, basically, compared for 3 years, comparable,
Well, what's
So,
driving it? Is it the low end? Is
in
it?
the mortgage world? Huh?
No, I was just saying, what's driving that? Is it because mortgage rates are so low? Is that really the,
Yes.
the big driver? No, right.
Absolutely. Yeah.
Mhm.
What, less than 3%, right? That's what you're
Yeah.
seeing, Phil, correct? The
Yeah,
mortgage
that's
rate?
exactly, absolutely. I think it's well below 3% on a 30-year fixed if you qualify. Absolutely.
Mhm. Mhm. Yes, and I'm actually having a lot of buyers now come out of the woodworks looking basically for properties. Now the other side though, I mean, if people are looking or waiting for distressed properties or
Right.
foreclosures to hit the market, I don't see that happening because our supply is so low.
Yep.
Basically, we have a lot of investors, myself, even as an investor, sure, I would
Right.
love to be able to get great deals. But if you're waiting for that, you're going to wait, longer than expected. Because I don't foresee any type of catastrophe or crash anytime soon in the market. Not in Las
Yeah.
Vegas.
Yeah, it's interesting. I think you could almost clone what you just said for every area. I know that there's a flight from the inner city to get out because we're all remote and getting away from the horrors of the COVID in the inner city. But at the same time, the prices in most cities haven't come down at all. And I don't see Vegas coming down just because it's still cheaper than living in LA, which is the next city over, or Phoenix, or Scottsdale, or any number of other major U.S. cities surrounding Las Vegas. Las Vegas is still a pretty good bargain, right?
Absolutely. Oh, no,
Right.
we're going to hang in here. And, I mean, there's an influx, still a large influx of people moving to Las Vegas
Right.
because of the prices.
Yeah, it's
So,
interesting. Yeah.
I mean, Las Vegas is just keeping steady and stable, basically, and it's even rising, but just with a steady amount of appreciation.
Well, what is the appreciation? 3-4%? Less, more? Right. Right, exactly. So the median home price, what is it there now? 300,000, 310, something like that?
Yeah,
Right.
yeah, right around there.
Yeah, it's interesting. If you go into
Depends on between, I'm sorry, go ahead.
no, I'm just talking over you. I'll stop. Sorry.
That's okay. I love when we speak in person,
It's so much easier than this echo chamber I'm dealing with. Yeah, I know. It's awful.
Yeah, true. But yeah, Las Vegas is a great market, and as a buyer, you still can find deals because because of the COVID, there's certain properties that have been sitting, or a number of properties that have been sitting on the market for a little bit longer, 60, 90, 120 days. Now, as a buyer, yeah, it may not be comparable to distressed properties or foreclosures or anything like that, but you can still negotiate and probably get a decent deal.
In Malibu, I have a property, $1,070,000, right? $1,070,000. It's a townhome. Now, you would think that price, based on what the product is, would really outpace most of the buyers. However, we too, here in my little town of luxury and beauty, yeah, there's not that many properties on the market. So we're seeing a ton of activity and a lot of offers. So it's a supply and demand. It's pretty cheap still. The money is cheap. So even at the high end, you're seeing it. Now, I know Vegas has had high end. What is that type of the market out there doing?
The high-end market actually is a bit. I'm shocked because, you know, historically, when you have something over $500,000,
Right.
you know, it really sits for a while, right? Because you don't have a lot of qualified buyers. But what I have seen, especially in my community as well, you know, we're at about 1.4, 1.5. Prices have been increasing, you know, steadily for the last few months since the COVID. I've seen prices in my community go up at 100,000.
Wow. Wow, that's a lot.
Properties that are on the market, which isn't a lot anyways, but the ones that are going to contract very quickly. This is what I've seen, and this is my area now. I'm in Henderson.
Right.
So,
hey, Gentil, could you?
That high-end market is actually moving, quite a bit too. Even though, like I said, there's not a lot of supply.
Could you shout out your phone number for people, will you, Gentil?
Yeah.
Yeah, shout out your phone number.
Oh yes, my number, Realty One Group, Jean T. Chun, 702-46. And tomorrow, Wednesday, the next episode of Marrying Millions come out on Lifetime, 10 p.m., 9 Central. So be sure to check that out.
And you are terrific in it. Thank you very much for coming on the show once again, enlightening us with what's happening in Las Vegas. And I think we'll have you back soon because it's very interesting what's going on in a lot of cities, Las Vegas especially. Thanks a lot.
Yes. You're welcome, Jeff. Thank you for having me again.
Thank you very much.
Bye. Love you.
I love you too. Jean-T Chun from Marrying Millions. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening, tuning in each and every week. We are on the Big 8 podcasts. We are on YouTube, Jeff Barton, the Mortgage Voice. We have 5 radio stations, 6 or 7 radio stations in 3 different states, New Mexico, Albuquerque. We're up in Las Vegas, Nevada, certainly in the Inland Empire and up in Lake Tahoe. We have a number of different physical events happening in Southern California and in the Western states, whether it be the turning from summer to fall, bringing on a lot of high intensity winds and fire season, but there's a lot of fires out west. And if you are involved with that, just make sure that if you're funding a loan this week, next week, that your warehouse lender for your lender itself is able to do so without going out and making sure that the property is still there. It's a real concern, and there's a number of alerts out there, so be sure of that. I know I've said it several times on the show today, but it's very important. So switching gears just a little bit, we're going to have Phil Pareto on the show. He's been on the show several times, but not recently over the last 4 or 5 months because of COVID. He's in the investment and also in the entertainment business. He works for Valstad Securities, and he joins us again today. Phil, how are you?
Doing well. Always great to hear from you, Jeff, and be on your show.
Thanks very much, Phil, and thanks again for doing it. I just want to get right to, I guess, what is happening overall in the economy in your business, and then locally, how it affects what you're doing there in Las Vegas.
Yeah. So let's. So where do we start? You know.
I know.
I mean,
I know.
The market just keeps wanting to go up and up and up. I mean, you've seen some pullback right now, and these Robin Hood investors and the millennials are getting a little scared right now. But we won't. It doesn't seem like we'll see a retraction until 2021, and then the market might not fix itself until maybe 2022 because it's all overvalued right now. But I think right now it just keeps wanting to go up.
Now, I think, now you correct me if I'm wrong, I think a lot of this has to do with what the Treasury is doing, what the Fed is doing. It's certainly what is keeping mortgage interest rates down, which is fueling the mortgage interest rate, lowering the mortgage interest rate. It's an artificial lowering, but at the same time, it's real for somebody who gets a 2.5% mortgage. I think that kind of free money is what we're talking about when we're talking about, okay, the flooding of money into the stock market. Anybody that can make money, it's easier to make money in the stock market than investing in a long-term strategy like buying real estate, right?
Well, yeah, I mean, that's what they're doing. So, yeah, I mean, people are refining their mortgages. They're taking out HELOCs. And yeah, this is a great time to buy. It's the real estate market is booming in Vegas. And so,
right.
But like you said, people are just trying to jump on this stock market bandwagon, like a lot of first-time swing traders out there, first-time day traders out there, and
right.
just trying to take advantage of it.
When I first heard the term day trader, it was during the dot-com bubble or boom, I guess, before the bubble, back during the turn of the century. Interesting that we're now back into that same where, you have somebody that used to be a shoemaker and now they're day trading and making X amount of dollars per day. Do you think this is a shakeout and trying to scare off those type of investors, or do you think the market's so big those people don't even matter?
I think it is a shakeout. They are trying to scare those investors.
Right.
But there is so much information out there that it's going to be hard for them to be scared off. I mean, if let's say a lot of these people are going into put strategies and
yep.
call strategies and options and all of that. I mean, if they see pull back or if they want to go into the market, they just find somebody they know in the investment industry, and then they ask them how to do a straddle. They ask them how to
right.
Buy these options so that they don't lose their shirt, and then they just implement it. I mean, with all the online discount brokerages and
yep.
the Fidelities out there and the Charles Schwabs out there, they make it really easy for you to make this happen. So they are trying to be scared off, but I don't think they will be.
I know. And tell us a little bit about your own business and what you're doing and who you're helping and what you're specializing possibly in.
Oh, okay. Yeah. So, I mean, so Valstead is the umbrella company. It's an investment banking firm, and basically we look for companies 5 million, 10 million and up in Vegas that are looking for, debt financing, corporate financing, casinos that want to bring back their employees that need the funding to get their casinos going again, the local casinos, and even some of the big strip casinos.
Right.
Valstead also has a brokerage side called Sutter Securities, and we do retail brokerage on
mm-hmm.
that side.
Okay, that's interesting. Now, as you know, I think the Fed and the Treasury were saying that corporate bonds is on their horizon to start buying. Is that why that might be attractive to somebody in need of money in Las Vegas? Certainly the big casinos. I don't know how many have filed for some kind of protection, but having the ability to be able to sell bonds, even though you might not have a business model that's really effective for the next 6 months. I mean, you may be out of business for that long just because they're not going to open the casinos. So corporate debt, buying corporate debt, things that the Treasury and the Fed are doing, does this help a business like yours? Does it hurt a business like yours?
Yeah, I mean, so just in Vegas alone, I mean, the people are going to the casinos. These casinos, the ones that are open, are packed. I mean, they are packed on a daily basis, and so,
okay.
They are, the companies and the casinos are not afraid to seek debt financing from the public. So corporate corporate debt financing from the public. So they believe that they could make it back, and they believe it's the right thing to do to rehire their employees.
No, I agree with that. Yeah.
The major, like Caesars and MGM have had a bit of a hard time doing that just because they're so big.
And they have probably half the casinos in Vegas they own. So yeah, it's very difficult.
That's correct.
Yeah.
They both have like 10 casinos each.
Right. That's right. And so, okay, let's shift gears once again. Are you still able to operate your own business? I know you do some comedy club you had for a while there down in the old part of Vegas. Are you planning to reopen? What's happening with that?
Yeah, so it seems like the governor's not allowing any of the shows to reopen until 2021. So we've had to pivot a little bit, and we've done a few things. We've had drive-in comedy shows here that we're filming and trying to get edited for Netflix, and those are a lot of fun because people can just drive in their cars, and we have food trucks and mobile bars set up. So it really is an experience for the audience member. We've done that. We've also gotten our Tickle Me Comedy Club podcast on Roku and Amazon Fire. So, we went from having very few followers to having a 10 million follower base on Roku and Amazon Fire, which is great and helps with advertising. And then we're also looking at individuals that still want to do shows, so and then what we try to do is the only way you can do shows here in Vegas is if it's considered ambiance entertainment. So you cannot charge for a ticket. People come in, they buy food and drink, and then we provide the entertainment for free. And so we have some Spanish comedians that want to come here from Mexico, Spanish speaking, and so we'll probably do a few shows with them. And then we also have a comedian, David Silver from San Diego, that's looking to break the Guinness World Record for longest stand-up comedy set. And so we're putting together a show for him as well. So we've learned to pivot a little bit.
Hey, could you shout out your phone number for the various things that you've talked about the show? I'm sure there are people interested in both investment side as well as perhaps the entertainment side.
Yeah, that's terrific. Yeah, so if you, our local office number here is 702-825-1534, 702-825-1534. But you could also always reach out to me at Phil@ticklemecomedy.com. Phil@ticklemecomedy.com.
Phil, thanks very much. You're always helpful and always a great guest to have on the air. I really appreciate it. We'll talk to you soon.
Well, I appreciate doing this all the time, Jeff. Thank you.
Thank you very much. That's Phil Pareto. He's from Valstad Securities and also from Tickle Me Comedy. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thank you very much for watching and listening to the show each and every day. We're on a number of podcasts, the Big Eight, they call them, and I'm sure most people who listen to the show know what the Big Eight are, but we'll have Daryl read them off if he would for us, please. That'd be great.
Absolutely. It's Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Okay, excellent. And we're on YouTube. That YouTube channel is Jeff Barton, the Mortgage Voice. We shoot this for television. A couple of the radio stations carry a video feed. Those are the stations out in the Inland Empire, KMET. We are down in Albuquerque, New Mexico. I want to say hi to our friends down there, as well as up in Las Vegas, Nevada, and in Tahoe. A lot of fires up north, Daryl. What's happening up there?
Yeah, it's pretty tough up above Fresno. There's in California wise. I just talked to somebody in Oregon who over 100 homes destroyed so far. We tape on what's today, the 8th,
Yeah,
I think. Yeah, the 8th of September.
yes.
And Washington State, of course, on the news last night because of the devastation up there. So, and we
Yeah.
have two of our own. We've got the fire up in Azusa and also the Yucaipa fire.
Yeah, it's that time of year, and it really, yeah, we just get sucked. Now I say here and we, and what I mean is Southern California, that's where the show is, that's where I am, although our reach is to Nevada and down into New Mexico. But for the most part, this time in the West, this time of year is fire season. And because we have the COVID pandemic and we're still reeling from a fire that we had ripped through here in my area 2 years ago. Yeah, it's just a rough time of year. And there was an alert that came out last week for the fires in those particular areas in Colorado and Central California. Some lenders are getting the rug pulled under them, from under them, by their warehouse lenders, because the warehouse lenders are afraid that if, deal funds today and tomorrow the house burns down, well, that's a problem. So there are a lot of alerts as to which counties and which individual cities are affected by the fires. And if you are one of these people who are out there right now waiting for your loan to fund, and you're in a fire area, or at least check to see if you are in a fire area, because there may be some delays on that closing. You may want to get ahead of that. Okay, so talking earlier in the segment about real estate values, and what happens when people start moving out of the city and they move out to different areas, because what we have now is remote learning. Listen to me, remote working. My nephew has moved to Boston with his fiance, and they moved from New York City. Her family's from there. It's a story, but regardless, that's where they live now. And his job is in White Plains, New York. It's a suburb about 30, 35 miles outside of New York. He's remote from Boston with his company in White Plains, New York. Now that's remote, okay? That is saying I can live anywhere and do my job. At the company I work for, Malibu Funding sponsors the show each and every week. It's not cheap. I appreciate what they do, and thank you very much for allowing me to be on the air for the last 6 years plus. But they allow too remote working. Now, for a lot of companies, we're in the information age now, or at least we were last century. I don't know what they're calling it now, but so the transfer of information from me to you, the research of information, the online ability for everybody to meet up in a Zoom setting or a FaceTime setting or a WhatsApp setting or any number of different ways by which you can contact each other and look at each other has allowed people to be able to move. So how does that affect prices in the inner city? Well, New York City apparently, now we don't live in New York City, we're out west, so what's the difference? But it will affect larger cities. San Francisco, for instance, on the West Coast is experiencing it. Seattle, we're experiencing it. Silicon Valley is experiencing it. Certainly New York, Philly, Boston, Miami, Dallas, Denver, Chicago, all of these large cities across the country, which, by the way, Malibu Funding lends in all these places, is experiencing a drain of population from the city. One, rents are too high. Cost of living is too high. And two, you're surrounded by people, nothing but people all the time. So if you want to remain socially distanced, the best way to do that is to move out of the city and find, especially if you're in one of these jobs where most of them are, and most of the people who are in these kind of jobs are saying their productivity rises. I don't know how that's measured. I really don't, because in my own particular company, it's difficult to measure. You trust a lot more as an employer because I don't have the technology in place to watch what's happening out there in where my employees are. But for the most part, the 70, 75 people are out there doing what they do, making money, checks are coming in, so it looks, I guess, as productive as it was. But for the real estate within the city and the real estate in the outlying area, Real estate in the city, what we're seeing is real estate prices not going up the way it was. And if this persists through COVID, which I'm not sure it will, again, back to everybody says the world's going to change. I don't know. You'll have to see. Does this mean that this is a permanent replacement for people coming into large offices? Therefore, you don't need a large office. I'm in the real estate mortgage business. Back in the 80s, 90s, 2000s, all you had were 50, 100 people in a room. And that's where the predominant business was done. Now, you have a shoebox-sized office in a little nothing building in the middle of nowhere, and that's your corporate office. Everybody else is working from home. Is it better? I think it might be. It might be because it allows you to be able to pick and choose where you want to live. You're not living where you need to be. The commute doesn't exist, and therefore the strain on all the public services that need to be utilized when you're transporting yourself from one place to an inner city doesn't exist anymore, or that you need to ride a subway, or all those things that are crammed into it. So this means that the real estate prices itself are going to fall at some point. Have to, right? I heard New York City is a ghost town in Midtown. Most of the businesses have relocated or have pushed out to on the West Side Highway. There is a whole Javits Center. There's a whole reconstruction of what used to be railroads and extra highway down there. And they've made a huge, just go to a map and you can see it. The renovation is unbelievable, but it's drained the inner city. And this is happening to a lot of different cities. But what's happening out there in the countryside, I say the countryside, in smaller cities, what we've seen is that prices in the smaller cities have begun to rise, 8.8% in some cities recently, year over year. That's a big number for a small town that's not used to that. So what happens to the local population who now has to deal with rising prices? You've got more people living there, and you've got more demand on services in the local area. It's not simple, and we're not quite sure whether this trend is a trend that will continue. I will say that I think that the option to stay home, especially if you've got, I know there's when you have children, you get to leave 3 months, I think it is. They're trying to amend that to 6 months, and they're trying to make it with pay. But if you are home with young children and you are able to work from home, you might be able to actually do both. Maybe not great, but you might be able to do both, especially if you have another spouse and you trade off with childcare, which may be a benefit to the whole process of, millions of people now working from home. These are all things to think about when you're thinking about, where am I going to live? Where do I have to live? I really need to find a place that I can afford. The real estate is expensive in certain areas, not expensive in other areas. I was looking online at a house up in the mountains, right? Everybody, well, maybe not your dream, but it would be my dream to get up, get away, be able to, smell the fresh air, have the cup of coffee, and be doing all my high electronic work online. Anyway, these are all things to consider, given the fact that we are still in transformation from what was to what will be. We may go back, we may not. Anyway, I'm Jeff Barton. Thanks very much for listening to the show. This is The Mortgage Voice, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.